Welcome back. Time now for the Word on Wall Street. Top investors watching your money. Joining me now is Allianz Chief Economic Advisor Mohamed El-Erian. Also with us is John Lonsky this morning. Mohamed, great to see you. Welcome to the program and the conversation.
Thank you, Maria. Thanks for having me.
I want to get your take on Japan, Mohamed. A big rally overnight for stocks in Japan. The Nikkei up better than 500 points after the Bank of Japan raised interest rates to a 30-year high, sending the country's 10-year bond yields above 2%. What's your take here?
So the 25 basis points hike by the Bank of Japan, and they are hiking while we should be cutting, was expected. What was surprising was a more dovish press conference. And that gave a lot of energy to the stock market. It also weakened the yen by about 1% against the dollar. So there's a country that is hiking rates, but the government would like them not to hike rates. And that came out very clearly in the press conference.
I see. Is there an impact here? Because back at home, Mohamed, futures this morning are mixed after the better than expected inflation data yesterday. As you know, the CPI coming in up 2.6% on the core level, and headline was 2.7%. Markets are bracing for some heavy positioning flows today. More than $7 trillion in options are expiring. That's one of the largest quadruple witching events on record. And as you know, it always causes lots of volatility. But despite the recent volatility, markets have delivered a very strong year. All the major averages up in the double digits. The Nasdaq up 19%, the Dow up 12.7%, S&P up 15% year to date, largely driven by the AI-led rally in tech. Wall Street's biggest banks are projecting the S&P 500 to continue climbing into 26, with targets ranging from an S&P 500 of 7,100 to all the way up to 8,000 because of this strong earnings backdrop and expanding AI investment and expectations for Fed rate cuts. What are you expecting from the year ahead, and how are you positioning yourself and telling clients how to position?
So, Maria, first, it's been a great year. Not only have you gotten double-digit return on your equities, but you've also got paid on your bonds, 6 to 7%. You've also got paid on your precious metals. It's been a great year for most assets, oil being the exception, but that means we're paying less at the pumps. Looking forward, there is a central scenario, which is that the U.S. continues to grow solidly. Inflation is a little bit stubborn above the Fed's 2% target, and markets deliver another good year. But that central scenario, and that's what's going to make next year really interesting, is pretty low in terms of overall probability, about 50%. You have a very good right tail of a super productivity boom, and then you have the left tail of a policy error by the Fed or something else going wrong geopolitically. So next year, I think, is going to be much more about selecting the right names, the right sectors, rather than going on a massive wave, which was what this year was about.
Yeah, and I guess it was easier to make money this year than what you're saying. It could be the case next year if you want to be more selective on sectors and individual names. John, OpenAI reportedly now looking to raise $100 billion, potentially valuing this company at upwards of $830 billion. The company requiring massive capital to build advanced models to stay ahead of this intensifying competition on AI from rivals like Google now is a recent entrant. Your thoughts, John, on all this money moving into data centers and AI?
Well, right now it looks as though investors really believe in OpenAI's story. You know, after all, OpenAI this year will maybe generate about $20 billion of revenue, and think that they could raise $100 billion, and moreover, think that they would value that company at $830 billion. $830 billion is more than 40 times OpenAI's latest revenues. You really believe in the long-term growth story, and by long-term, I mean long-term. They expect to be losing money for some time to come. In fact, the projected cash burn, the amount of capital spending in excess of free cash flow, is looking supposed to be $200 billion per year through 2030. That is a cumulative sum. That's close to $1 trillion. You got to love their human capital. You've got to love their intellectual capabilities in this area. If you don't, this is a highly overvalued company. And if it proves to be the case, then it might be a company like Google that steps in and provides it with very needed support.
Yeah. The other big story, of course, is this announcement on the Federal Reserve Chairman. Mohamed, what do you think about all of this? Take a look at interest rates this morning, because President Trump is still weighing his pick for the next chairman of the Fed. Yesterday, he said he's talking to 3 or 4 candidates. The president signaled he wants a more aggressive approach to rate cuts. The yield on the 10-year this morning is up again. It's up 3 basis points at 4.15%. The president wants rates to go down and bring mortgage costs down. He's praising Fed Governors Christopher Waller and Mickey Bowman. Without confirming any finalists, I still think the finalists are Kevin Warsh or Kevin Hassett. Watch this.
How many people are you interviewing for the Fed chairman, and what did you think of Chris Waller?
I think he's great, and he's a fantastic man. I met him yesterday. Again.
So how many people are you looking at?
We're talking to 3 or 4. I think every one of them would be a good choice, honestly. We'll be making a decision pretty quick.
Is Michelle Bowman on that list, too?
She's fantastic. She's a fantastic person.
When do you expect to make your announcement about the new Fed chair, sir? Before the end of the year?
Over the next couple of weeks. I mean, I don't know before the end of the year, but pretty soon.
Mohamed, what do you think, and how do you expect the Fed to act differently in 26?
So 4 things. One is the higher yields today is a function of what we talked about earlier, Japan. Secondly, the president is right. There are very strong candidates. All 5 on the short list are very credible, strong candidates. I agree with you that it is down to the 2, probably it is down to the 2 Kevins. Both of them are committed to lower rates. We know more about Kevin Warsh than we do about Kevin Hassett, because Kevin Warsh has gone beyond rates and talked a lot about what we need to do to reform the Fed. And I really like what I've heard from Kevin Warsh. Finally, as to what the Fed will do, this Fed is probably going to do nothing in January. It will wait for more data, and it lacks a unifying vision. Late in the year, I think we will get rate cuts.
Okay, so how significant will those rate cuts be, Mohamed? Are you expecting 2 rate cuts in the new year or more?
I think for the year as a whole, we'll get 2 to 3, but we will not get one in January. We may get one in March, and then we'll get them later. This Fed is paralyzed because it is backward-looking. You and I have talked about it. It's excessively data-dependent. It hasn't embraced the productivity promise that we're looking at. And because we're still recovering from the shutdown effects on data, it will wait. So unfortunately, this Fed isn't looking forward, it's looking back, and it therefore is going to be very hesitant and very divided.
All right, we will leave it there. We will keep watching that. And John, I want to get your take on that later on in the program. Mohamed, good to see you. Have a wonderful holiday. Thanks very much for being here.
Thank you. You too, Maria.
All right, Mohamed El-Erian, John Lonsky, you're with us all morning long, and we are grateful.